All right, my hair is messed up, but we are going into Target today. So their earnings report just came out. It was rough, down I think 17% this morning. I know Walmart's came out yesterday, I believe, and theirs also wasn't great. So the retail sector as a whole is not looking fantastic. But let's get into targets, see what happened, go over their overall financials, see how that's going, and then give them a review, give them an analysis. So let's get into it. Make sure to subscribe. Let's go. So just getting right into the financials, I'm going to run through this quickly only because I want to mostly get into their earnings statement and see what exactly went wrong. So we're just going to run through this as quick as we can. So cost of capital looks decent. Target price is okay. Long-term growth rate looks good. Income statement should, in theory, be solid, but I'm sure they've been shaky recently if I had to guess. And it looks like they have declining for 2 years, which is not fantastic. Yeah, sales are a little sketchy there. Operating income probably the same, and actually no, operating income has improved very, very significantly. So that is something. Net income, same thing. EPS is going up, and then total shares, slight decline. Really nothing too crazy. Actually down a good amount from where it used to be. So honestly, nothing too crazy there. Looks pretty solid. Let's do balance sheet. Should be decent now that I'm seeing everything else. A lot of short term, coverable by cash though, which isn't too bad. I'm gonna put cash at a 0.5 because they can cover their short term a little bit, or they can cover their short term, but not significantly enough to where well, actually, you know what? No, I'll give them the credit. Assets look good. 55. Yeah, assets look pretty solid. Short-term debt again is coverable by cash. Short-term, long-term. Long-term debt is fairly significant, but it looks like they brought it down in 24, but it has been basically always increasing. And then short-term debt has seen a bit of an decrease in 23. So overall, not really decreasing there. I'm sure retained earnings is probably the same story. Let's see here. And actually, no, retained earnings is pretty solid. 7 billion right now, which is decent. Let's go into the cash flows. I'll try to get through this quickly because I do really want to see what their income statement is looking like, or what their earnings report is looking like. So operating positive looks good. Investing looks pretty solid. Investing looks solid. Financing looks good. Again, they've been repurchasing a lot of stock over the past few years, and they've been doing it for a while. Free cash flow is positive. Actually took a hit in 23, and for 24 is estimated to recover. So let's just see. I mean, 3, 4 is usually the average. They're supposed to be at 5.2, so pretty solid there. Use of cash, again, will probably issuance, repayment. So it looks like they have been issuing fairly significantly more. This is all in billions, by the way, which is why the numbers are so small. But they have been issuing more. They did not. Now, I don't know if this data is completely finalized, but they did not repurchase any stock in 24, which could be a problem. But for now, I'm going to still give the credit because, again, that data could possibly not be finalized. There's also no debt issuance. and there's no numbers here. It could be finalized though, in which case if they did stop stock repurchases, that could be a problem. But for now, considering how they have not issued in a while and have been consistently repurchasing for every single year shown here, I think we're okay to leave it as that. Let's check out the ratios. SG&A should probably be pretty decent for a retail company, which it looks like it has been actually increasing for the past few years, down from a little while ago, but overall it is above the current 5-year average, which is not great. Considering it's fairly stable, I'm going to give it the 0.5. But again, if we start seeing this continue, which actually we could look into the quarters and see what it looks like now. If it's above like that 19, which again, yes, it is consistently increasing. So never mind on the 0.5 there. Net margin has been increasing for 4 quarters straight, which is definitely something compared to 23 where it was negative. Again, used to be fairly consistent right around this area. Let's just look at the 5-year average quickly and see where it's at. So 4.3, it's at 385 for 2024. So again, it is below that average, but a decent recovery compared to 2023. So I will be giving the 0.5 there. ROA, ROE looks fairly solid, nothing too crazy. And long-term debt to total equity is at 135%. So that is not fantastic. It did decrease from 23, which is something to consider. But again, with it being so high, I really don't like it too much. Now, in 2024, they have clearly worked towards lowering that, which is nice. It looks like they're down from a high in January 23 and have been declining every single quarter since, which is pretty good for the debt to equity. So I'm going to give them the score for that. So overall for Target, 18.5 out of 23, 79%. Not too bad, honestly. If you're seeing some companies here that I haven't reviewed yet, like Paramount and DPZ up here, those will be out later this week. I'm just doing a few higher trending stocks first. Those are stocks I just want to have reviews for. So I believe that one will be out tomorrow, one will be out Saturday, although I don't remember which is which. So anyway, let's get into Target a little bit more and check out the earnings report. It should be released today, which it is. Okay. Reports third quarter or earnings. Hopefully this is the metrics, which it is. Let's see if there's a better one though. There we go. Metrics recap. This is what I always like to look for. So 0.3 versus 1.5 and guidance 0 to 2%, which is not really great growth. Total revenue missed slightly. Looks like other, not really. Gross margin was lower than a year ago. Operating margin lower than a year ago again. Inventories increased by 2.9% and sales increased by 0.9%. So they are not exactly in the best situation in terms of their inventories. I mean, you have to remember it costs money to store inventory. So having that increase outpace your sales like it is here is not fantastic. Also, which I just realized, you could see transactions increased by 2.4%, but average amount decreased by 2%. I'm assuming this is store sales, decreased by almost 2%. And then digital increased by 10%, which is not terrible. That's pretty good. But Other than that, primarily this is fairly negative stuff. So I do see where the big negative 17% is coming from. Let's see if there's any more information in this one, possibly. So it looks like guidance, quarter four guidance, they put at 185 to 245 versus the estimate of 230 to 298. So there we go. That's what we're seeing. And then 2025 guidance is also lowered fairly significantly, 830 to 890 versus 9 to 970. And FactSet had a average of 956. So again, that is pretty rough. You could see the management comments, 2.4% increase in traffic, which I talked about, 11% growth in digital. But here's the thing, they are not primarily digital. Their work is in stores, which are down 2%. So while their digital is growing, I don't know if that 10% outpaces the 2% drop we've seen in stores. So that's not great. Again, the decreased guidance is generally, at least nowadays, from what I constantly see, decreased guidance is a death sentence. As soon as you do that, your company is dropping. So let's check out the stock chart and see where we're at. So pretty bloody. You can see the past few years here. They had a fairly significant low just about 1 year ago, which I'll show the full year here. They are up essentially constantly throughout the entire year here. Let me do the price range. They were up 22% over the past 52 weeks. Solid growth, all of it wiped out in one day just today. And they're back at 129, which is basically where they started 1 year ago. So that is not great. That's actually really, really bad. Basically, any progress they made got wiped out. We're most likely, just based on where the support area is here, we could see it drop even farther to the low hundreds, right around 100, maybe 110, 115 area, just based on where this area is compared to it. It's most likely going to be a rough couple of weeks for Target, but hopefully they kind of bring it back a little bit. So that's about it. That's all I have. Thank you for watching. Hope you got something out of this. Hope you learned something. Make sure to subscribe, and I will see you next time.